Hello and welcome to the latest investment market update. I hope that you're keeping well and enjoying the good weather. I'm Brian Morman, Director of Brunsdon Financial, and today I'm being joined by Mark Shields, Investment Director at Brooks Macdonald. Brooks Macdonald have been carefully selected to manage the Brunsdon investment funds, and using their expertise, the team analyse movements within the market and make tactical changes. So good morning, Mark. How are you?
Very well, Brian.
Okay. Markets have staged a strong recovery over the past month or so. What has been the drivers of this?
Yeah, Brian, you're absolutely right. I mean, as I'm talking to you at the moment, Liberation Day was sort of, a little bit over a month or so ago. We obviously saw, really very significant falls in equity markets in particular, but also to a degree some of the safe haven US denominated, treasuries, dollars, etc. Came under quite a bit of pressure. Since then, obviously, there's been this 90-day reprieve on the reciprocal tariffs, and markets have staged a substantial recovery. And in fact, as I'm talking to you at the moment, the S&P 500 is now actually higher than it was at the start of the year. It's not quite back up to the levels it was at the sort of middle sort of end of February, but it's not that far off. So, the markets really have staged a very significant turnaround from the lows that we were seeing in April. That really has been quite surprising, I think, given that actually, arguably some of those issues have maybe not really gone away. I think markets have been helped out quite a bit by the agreements between the US and the UK for a trade. It's fairly loose trade agreement, but it is there, it is in place. But also, obviously, much more recently, the administrations in both the US and China have come out to say that they are talking to each other, and that actually high tariffs are not kind of good for either economy. And in fact, we have seen a reduction in some of those very high tariffs that we saw implemented in the aftermath of Liberation Day. But we have seen markets stage a surprising recovery over the past month or so.
Yeah. So also interest rates, of course, in the UK were reduced slightly. But how has this affected then the near-term outlook for you?
Yeah, it's really made things quite tricky, if I'm honest with you, because obviously the news that nations are willing to talk to America to come to some sort of agreement. Obviously, the news that China and the US are currently in discussions. This is all positive. These are all positive elements. And we've had some reasonable data out from the US as well. So we had some inflationary data out from the US, as I'm talking to you today, came out yesterday that was broadly positive. Some of the employment data from the US has been broadly positive. These things are coming together to sort of suggest that, some of those fears that people had of the tariff implementation having a negative impact on the economic and inflationary outlook in the US has not yet materialized. However, having said all of that, we still remain a little bit concerned. It's worth remembering that the US has put 10% tariffs pretty much on every nation on the earth, on planet Earth. That will be inflationary, and that will have an impact on economic growth. It might just be that has not actually had time to feed through to the US consumer yet. So it could well be that the impact of that doesn't really start to happen until June, July, August time of this year. In addition, we've got the fact that the majority of those reciprocal tariffs, as they were called, were just delayed for 90 days. So is the market going to start sort of thinking about that as sort of, early July comes round? That is very, very possible. So it could be that we get a return to volatility, maybe in the near term, unless we get, a firmer sort of more agreements, or indeed a firmer sort of outlook from the US administration as to what's going to happen with those reciprocal tariffs. But also we'll be keeping a very close eye on that data to see if any deterioration does come in over the next few months, as may well take place.
Yeah, it's really a case of watching things almost on a day-to-day basis. So, Mark, are you looking at any changes to the portfolios in light of this recent market volatility?
We are actually, Brian, yes. So I think, in light of what I've just been talking about, really, obviously the near-term recovery, but also, quite a bit of question marks really again and again over the near-term outlook and maybe for the rest of 2025 as well. We're moving to a more of a neutral stance with regards to equities. So we have been slightly overweight equities versus bonds. We're planning on shortly making some changes to the portfolios to become a little bit more neutral with regards to equities. So in the cautious fund, we're going to be trimming a little bit of our US exposure, adding a little bit to more defensive fixed income. In the Adventurous fund, we're going to be selling out of our smaller companies exposure, our US smaller companies. That was a position that had performed reasonably well, but has definitely come under pressure as that economic outlook in the US was more called into question. It has recovered somewhat more recently, but we feel that, again, if we want to go a little bit more neutral with regards to our equity position, we should probably come out of some of those areas that maybe are more exposed, and we feel that is probably one of them. So I think that, we're going to take this rally that we've seen in markets over the past few weeks as a bit of an opportunity just to become a little bit more sitting on the fence, I think might be a slightly sort of crude way of putting it. But again, as I said earlier on, given where we feel things may head over the next few weeks, months, we feel that's a prudent position to take.
Okay, understood. Well, thank you, Mark, and thank you for watching. As always, if you have any questions or queries, then please be in touch with us. Thank you.